What's up, everybody? We're going to be starting here in 14 minutes with former hedge fund manager Mark Putrino, chief educator at the Benzinga Trading School. A lot of you guys probably already know him. Mark Putrino, former hedge fund manager there, trading under the likes of Stevie Cohen, Jabelli. You know these guys, you know what I'm talking about. So he's going to be here with us today. We have a great session planned for you when it comes to the topics, the subjects, the markets we're going to discuss. We're going to show you a couple cool things on Benzinga Pro as well, and some things that we're going over in the trading school actively. So stick around, folks. 13 minutes now. We're going to see you in a bit. So make sure you stick around with us, folks. We'll be starting soon. All right, folks. We got 8 minutes left in the timer to get started with former hedge fund manager Mark Putrino, chief educator at the Benzinga Trading School. Go ahead, get comfortable, get your popcorn. We have some early birds in the house. Shout out, what is that? AI Wisapone. Alan, shout out Andrew Bernard Wise, Bangio, Catherine, Chef, Louis, Normandy, Pieter. What's up, dude? Ray, Richard in the house. We got Ruby in the house early. Love seeing you guys always here on time, on schedule, never late, right? Because at the end of the day, guys, if you don't educate yourself, who's going to, right? Everybody benefits of you not knowing what you're doing in the market. We're here to change that. We're here to show you how to learn and trade in any sort of market condition, even if it's inflation, if it's, the opposite, or if we're talking regardless what's going on, there's different ways to trade the markets. And Mark here is going to show you some very interesting things, some very interesting items that we're taking from the trading school, live lessons, just to give you guys here today, to give you a sneak peek of what we are actually doing in the trading school, back to back, day to day. Greetings from AI Wisapone. What's up, man? Miller in the YouTube. What's up, dude? Always on time there. I like that. So yeah, guys, that's what we will be going over today. Some strategies. We're going to talk about the markets, inflation. We do have something special for you planned here. Don't worry. Like Antonio says, smash that like for sure. And just make sure you're here when we start. That would be in about 6 minutes or so, guys. So just make sure you have everything in there. Venue, shout out, always early. We're going to start in 6 minutes, 7 minutes, guys. So make sure you don't go anywhere. We'll be right back. All right. All right, ladies and gents, welcome, everybody. How's everybody doing? Antonio, what's going on, my friend? We got a couple new folks here. Let's see. List got pretty big. Um, Number one, welcome to today's amazing session here. We planned for you with Mark Putrino, former hedge fund manager at some of these big funds. You probably heard of them. You know, Steve Cohen, Jabelli, been doing this for about 20 plus years. Chief educator of the Benzinga Trading School. So a lot of you guys that are actual students and you're here, welcome. This is the after class sesh, if you want to call it that. But we have some interesting topics today to discuss. We've been planning them for all week. Mark has a session fully laid out in the chat. By the way, go ahead, let me know where you're tuning in from. And also let me know when you're ready to start. Okay, when you're ready to start and the location. My name's Rodrigo, guys. I'll be here with you today. And with Mark, we'll be going over all this stuff. A lot of you guys are already familiar with him from the trading school. So that is probably where you've seen him. And let's go ahead and give some shout outs here. We have Michael in the house, Millen, Manice, Monty, Normandy, Randy. Always good to see you, Randy. Winston, Wayne, Venu, Troy, Tara, Stuart. What's up, Sean? Vishal, Veselin. Okay, we got a nice group of people here today. A lot of friendly faces, a lot of familiar faces I've seen before. So by the end of this session, guys, the goal is to get you from 0 to 100. Okay, we're going to give you as much as we can during this session. And of course, feel free that if you do want to follow up and join the school, because this is what we do every day, Monday to Friday with Mark, we're going to drop the link there. So don't worry about that. And I think we should be kind of good. Let's go. Heather in the house from Virginia. Heather's ready. Monty's ready. T is ready. Catherine's ready. Okay, guys, I think we can go ahead and start getting the ball rolling. Give me 1 second here, folks. Okay. All right, folks, you've been waiting for this for like an hour. So let's go ahead. I think Mr. Petrino is in the building. Mr. Mark, can you hear me?
Yes, I can.
Hey, Mark, how's your day going?
It's been going pretty well. How about yourself?
It's going same thing, man. These markets got me spooked. But I was looking at Nvidia earnings yesterday. I was looking at the reaction the stock had today. Just scares me right now what's happening in the markets. You know, there's a lot of confusion.
Well, I'm not disagreeing with you because you're right. But from a trading point of view, nothing that's really happened recently should really come as any surprise. That's one of the things we go over in the class. Inflation is way worse than I think people think. And it just set the tone for a negative market and a down market. That being said, I think we're getting to a place now where there's a good chance we could have a tradable bounce. But I think longer term, I think the market is still in trouble because of inflation, but we can talk about some potential ways that people could hedge inflation, even profit from it. For example, there are ETFs that if inflation goes higher, they go higher. So this is definitely an important time in the market. This is the first time the markets really had to deal with inflation fears for 4 decades, since like the late 70s. So I guess it's a good time to have an introduction, and it's a good time to join the class, Rodrigo.
Yeah, and look, even for the people when I started trading like 3 years ago, something like that, there were no trading schools. There were just pump and dump chat rooms, and the same old gurus, all those people that like I don't want to mention, but that got in trouble for doing this. So it was really like the wild west out there. And the fact that a company with the reputation like Benzinga comes out with such a user friendly, right, kind of a trading resource where you do Q&As, right? Q&As, office hours, live classes. So all that stuff. Some people, it's like, what? That's not real. No, it's real. It's called the Benzinga Trading School.
Yeah, we
All right.
try to keep it real, man. And, common sense. It's Wall Street has this way of trying to pretend things are way more complicated than they are, so they can charge money for things. But I think, if you really start to delve into it, it's not as complicated as it seems.
Yeah, and I know that with your experience trading under Stevie Cohen, Mario Gabelli, being a CMT since like 2001, you're an expert at read a charts. And I tell everybody you shouldn't be trading anything if you cannot read a chart. I don't care if it's options, crypto, commodities, right? Like that's the most basic thing. So it works for anybody, right, Mark? Even if they're doing crypto or if they're doing options. Yeah.
The problem is that, people tend to think that like chart reading is this like, it's like astrology. There's like tea leaves or this, magic things to see, but that's not what it's all about. It's all about understanding the supply and demand dynamics that are going on within a market. So the people that know what they're doing, in my opinion, look at the charts, but they also look at them with stuff that we're going to talk about tonight. Like, there's no such thing as like a magical pattern or this and that, but there are ways to look at these things and get an understanding of where the buyers are, where is their support, where the sellers are, where is their resistance. How does that help? Well, in a situation like now where the market's going down very aggressively, I'm sure a lot of people are saying, well, where is this going to end? And frankly, I think we're getting pretty close to that. And I'll talk about that. Now, it's nothing complicated. I don't have some secret, system or anything. It's just that the market is getting to a level that was support in the past, and levels that were support in the past can be support in the present. So it's just common sense and basic fundamentals, Rodrigo.
Yeah, and I always have in mind that article that you wrote whenever you were calling the top on the markets. That whole, it's just like the technicals are just so important, and if you look past them, right, or you're not fully aware of how to use them, it can cost money, obviously. So,
well, the technicals aren't biased. You know what I mean? Like you see someone on TV or one of these dime a dozen gurus, it's their opinion, right? Maybe they're right, maybe they're wrong. But when you look at the charts don't lie. The charts don't have an opinion. What they tell you is true. So that's why we like to look at these things. And if you understand that, and then if you view charts through a prism of how does this illustrate the supply and demand dynamics, as opposed to, oh, this is just some magical, secret pattern that says the stock is going to go up on April 25th or something like that. That's not the way to do it. So common sense and basic fundamentals.
Yeah, and ultimately, like a lot of people want to complicate it, like you say, and like the big traders like you guys, when you were on the floor with these folks, it's really not everything that you hear nowadays, right? They want to make it look beautiful and all that stuff. But all right, let's go ahead and get started. I know everybody in the chat is ready. Mark, you have your presentation ready, all the good things we talked about on the back end, but are you ready to take over the screen here? I think I'm still sharing my screen.
Yeah, I see you, and I see my name kind of like spinning around there in some kind of a psychedelic little thing that's going on. Maybe if we do a class on cannabis stocks, we could
hypnosis,
tie that in with some Pink Floyd or whatever is big these days. Some rap
Jay's
artist
good.
who I
Shout
haven't
out
heard
to
of
Jay.
yet, but whatever. All right, cool. So let me share my screen, and I'm going to start with this interesting company here, just which gave a lot of insight into what's going on here. All right, so let's see, share my screen. Okay, so can everyone see this? Tyson Foods. All right. Okay, so let me just let's see. Okay, all right, you guys can all see this. All right, I just want to make sure. Oh, someone from George from UK and Romania. Okay, cool. Heather, you can see it. All right, cool. And I assume you can hear me because you're responding. All right, so I just want to talk about something here, right? And a lot of the stuff you hear is, just not right. And I think people that are in the trading school, after a few months, they can start to, see that and start to even come up with their own ideas. So we were not surprised at all that inflation came in higher than expected in the CPI and in the PPI. And we were not surprised at all that the market is going down. Why? Well, a big part of that is the earnings release that we got from this company here called Tyson Chicken. Right now, the focus is on technicals, but the ultimate focus is on making money. And sometimes by looking at these fundamental things or these economic ideas, we can get technical trading signals that work, right? So with this particular stock here, Tyson's Foods, we had and I'll explain how we got to this conclusion, but the trigger was to take a short position, and short doesn't necessarily mean short. A lot of our students trade options, and frankly, I would probably never recommend actually shorting a stock because there's a chance it could go way higher and you could lose a lot of money. But if you buy an option, the most you can possibly lose is your investment. If you buy $100 worth of options and you're wrong, that's the most it can go against you. But we entered the trade on this break here, and we have this move down and we covered. Now, let me go back to how this started. Okay. So there's all this talk about inflation, and it's a real issue. And it's the first time it's happened in, 40 years. And it's, in my opinion, way worse than people expect or think. And here is why. Now, in the market, when companies report earnings, they tend to kind of cluster, like technology stocks report 1 month, or 1 week, other stocks report another week. So a few weeks ago, the technology stocks reported and we started seeing some losses. But considering the fact that there's so much emphasis on the supply chain and potential inflation, the students and I just talked about how there are certain companies that would be kind of good to delve into their earnings and to see if we can get any kind of insight. So Tyson Chickens was one of those companies. Why? Well, it has exposure to pretty much every part of the economy, right? It has trucking, it has farming, it has energy costs. It pretty much has everything. So the numbers or the earnings were a blowout. They were way higher than estimated. Wall Street, meaning all these highly paid, arguably overpaid, but that's another story. All these highly paid analysts predicted that this company would report $1.95 for its quarterly earnings. Okay, fine. They're looking through the past. They're trying to figure out how the past can apply to now, if there's the same kind of things going on. As it turns out, the company came in and they reported $2.87. So it was an absolute blowout. It completely destroyed the estimates, in the sense that destroyed in a good way, that it was up. So now let's think about this. Why were the numbers so good? Well, the numbers were so good because Tyson had to raise their prices. If you raise your prices, you tend to get better numbers. So all of these analysts that follow these companies and potentially inflation in the economy, they completely missed what should have been pretty obvious. Your job is to analyze this company. You should realize that prices are going up, and you should factor that in. So now let's get to the second part. Why did the company need to raise prices by so much? The answer is because their cost of goods went up so high. Tyson Chicken, right? They need to feed their chickens. We have this big inflation thing going on. Inflation drove up the price of soy, and corn has been kind of flat, but things that chickens eat. So they had this huge increase in cost of goods. So they had to increase their prices. So the earnings were good, but they were good for the wrong reason. On the surface, they looked good, but if you actually delve into it, we can see that. I mean, let's think about this, right? This company had a cost of goods increase of 18% in 1 quarter. 1 quarter. I'm not talking about like year to year. I'm talking about like 1 quarter. 18%. That's huge for a year. So the numbers were up, or the stock was up, but at first glance, the numbers weren't appearing as good as they thought. So from a trading point of view, the stock traded up, but it kind of shouldn't have, and it took a few days for the street to see that. So markets and trading are all about supply and demand. And one of the most important things in trading and understanding financial markets is that certain price levels are more important than others. It seems very rudimentary, but it's also, surprisingly to me, something very few trading teachers or coaches or whatever you want to call them, focus on. But for some reason, certain price levels are more important than others. Now, it's easy to see why $100 was important here. And while, Tyson rallied, but when the street figured out the numbers weren't as good as they seemed, we started to sell off. $100, nice round level. I would be imagining everyone who is listening, maybe not everyone, but 90 or 90% of the people are listening have probably placed an order at a nice round level. That's just human nature. Oh, I'm going to sell it at 100. You don't say, well, I'm going to sell it at 99.57 or 138 or whatever. So sometimes when we get to these nice round levels, we get it becomes important. So this was a psychological level. Now, here's a thing where some of these shorter term traders and the day traders really were able to take advantage of this. So we have a stock that gets overextended. It gets overbought. The buyers were too excited. They didn't realize that the numbers actually weren't that good. In fact, they were bad. But on the headlines, they looked good. So we were expecting a reversion, that this move was just too much, and we thought it was going to come back. But, as students of the market, now, important thing about the Benzinga Trading School is, we are not ninjas. We are not market gurus. We are not champion traders. What we are is students of the market that are looking for these anomalies or these equilibrium, these inequilibrium things. So for all we know, Tyson could have just, we put this on our radar screen, so to speak, our watch list when we had these earnings that didn't make sense. Now, Tyson could have blown through 100 and kept going higher. So we think there's going to be a reversion, but we're not sure. So what do we need to do? We need to come up with a way to decide or to get more insight onto, yes, this reversion we expected is actually happening. So what is one of those ways? And the answer is, in this case, the breaking or crossing of an important level. So for whatever reason, some support formed here on Tyson around 97.80. I don't know why. I mean, I know why it's 100, right? Because it's around level. So this trade was, if Tyson breaks 97.80, we think there's a good chance it is going to keep going lower. So that was the trigger to get into the trade. And sure enough, that's what happened. Now, the trade was closed out because we got to our target price, which was right down here around 94. We closed it out yesterday, a little bit higher. Going back to the thing of certain price levels are more important than others. Levels that were resistance can become support. Now, let me just do a little quick talk on this, but we can go into it more if you have questions. Certain levels are more important than others. I've said that. And these levels can switch back and forth between resistance and support. So here on Tyson Foods, this level was resistance. Here it became support. Why did this happen? It happens because of seller's remorse. Investors sold. They thought they did a great job when it went lower, but then it blasted up through their number here. And now all of a sudden, a lot of these investors say, I made a mistake. I shouldn't have sold.
Hey, Mark, really quick here. Just want to answer a quick question here on the chat. Looks like some of these folks are So just to clarify what Mark is doing, Mark is showing you a trade. This is a trade idea from the school, correct, Mark?
Oh yeah, dude. This no doubt. This is something
Yeah.
that a lot of the students have been. I'm sorry, sorry I didn't
So
say that.
no, that's fine. Just to let them know because they don't know what we're looking at. So basically, what Mark Putrino is showing are the actual trades that he recommended to the students inside the trading school. As far as your question about the colors of the bars, like the colors, they could be changed to any colors. Most people are used to green and red and green, but that's just how Mark has them. That's a normal chart, Michael. But yeah, let's proceed there, Mark. Thanks.
Yeah, my apologies. I should have done a better job explaining this a little bit more. A blue, when you see each one of these rectangles is a day, and a blue one is a day where it was up, and a red is a day where it was down. So, for the reasons I explained, we thought this was an over exaggeration, and it turns out it wasn't. It came back in. So that was a trade that we made that was successful. And again, it's not based on any, super secret formula or anything like that. It's based on just common sense. We had a number that didn't seem like it was right. We got to a level where there was resistance because it was a nice round level. And then the stock dropped to a support level. But, what does this show us, right? I want to show you this chart here. And this is a chart of inflation. Everyone's talking about inflation, and this is why I want to tell you that I think it's worse than people think, and then maybe we can review some ideas where you can hedge your portfolios or even profit from inflation. Believe it or not, the world of ETFs is so broad that we can actually do that. So this is what we call the CRB index. This is measures the prices of pretty much any commodity you can think of: oil, gas, coal, steel. I think we've had this steady move higher in inflation since going back to the COVID crash, way back here in March of 2020. Look what's happened recently. It doesn't seem to show any signs of turning over. In fact, it shows signs of even accelerating. It's almost like it's picked up speed. All those numbers I talked about from Tyson Chicken were based on prices that were here. Okay. When Tyson reports their next quarter, they're going to base everything on prices that are up like even more. I mean, inflation is up like 10% since then. So I think that, what am I ultimately trying to say? I think that inflation is worse than people think, and it's going to be bearish for the market. And so now the question is, all right, well, how can you protect yourself if you are someone who's concerned about inflation? Well, there are certain ETFs that are actually designed to track inflation. This is one of them. There's a few more, but this is a really good one. The symbol is DBC. It's called the Invesco Commodity Index Tracking Fund. So there is an Invesco Commodity Index, which is probably similar to the CRB index. This thing is designed to just follow it along. There's really complicated strategies going on behind the scenes with derivatives and options and futures, but you don't need to worry about that. For a regular retail trader, this is just like buying a regular stock. So if you're concerned with inflation, I think it's a good idea. And frankly, I think you should be, based on what I've been saying. I think this is a good thing to have in your portfolio. This isn't a trading idea here. This isn't a like buy it here, sell it here. I just think, I think we're going to go into an inflationary time. And this is a kind of a good thing to just kind of put in your portfolio and, let it run as inflation goes higher. I mean, look at it this way, right? It's at 23.
Yeah, it's a solid rally, man.
In December 21, it was, so it's up way more than 10%. But this is not a trading vehicle. A lot of the things we do in the class are trading vehicles. Like, this is overbought, that's oversold. I think if you're concerned with inflation, and if I was you and you're worried about your portfolio, it makes sense to have something like this in there. There's also another one, GSG, but they basically track the same thing. You'll see the charts are so similar. One's run by Goldman Sachs, one's run by other people, but we don't like inflation. I mean, inflation is not a good thing, but if this was 60 or 70 years ago, there wasn't really much you can do as an investor. People would buy gold or silver, or if you happen to have money, you could have your broker set up some kind of option strategy for you. But now we have these things, right? These ETFs that are really good vehicles. A lot of people, I think, are pretty interested, and I was too for a few months, as to why the prices of the price of gold and silver did not really go up and why they have actually been trending lower. Now, some people that might come as a surprise because gold has made a move higher over the last week or so, but this is gold here. This is actual gold. This is not a stock or anything. This is the price of an ounce of gold. Now, after the the COVID crash, when the government started pumping all the money in, it was kind of common knowledge, or I don't even know what the right word is, but like this like accepted thing that you should put your money in gold, and gold just ran up. And this is COVID crash here. And 3 months later, it peaked, and it's kind of been going down ever since. Now it's making a little bit of a turn. But I think the reason why gold and silver haven't worked the way they used to is because now there are these other vehicles, like these ETFs that people can put their money in. And as you can see, gold is making a little bit of a return here, but those those inflation ETFs have just kind of been going straight up.
Right. It's really good that you really build that foundation of education for new traders, that honestly, when you start, people are asking, how do I buy a stock? Like what is a stock? What is a stop loss? Like, so being able to give them this information, it's just, you're putting them like almost halfway through where they need to be, to knowing the tools they have to use whenever XYZ things happen in the market. Because a lot of new traders got sucked into the whole growth trade because they're not familiar with rates, they're not familiar with inflation, or with all these things that are happening in the background that directly impact it. But I'm getting a lot of questions here, Mark, about the school. So I'm just going to show this to them really quick so that we can go ahead and proceed with the session here. 1 second, folks. Yeah, I've already gotten like 10 emails here, guys. So be really quick. 1 sec. Okay. So, Mark, can you give me a heads up if you can see that?
I can see it.
Okay, this is the Benzinga Trading School, guys, so that you're familiar. You click the homepage, you can see all across the week, all the classes you have. Tomorrow, Mark has office hours. So if you do want to attend the office hours, you can do that. It's a recap of the week. You can look here Monday, he's got chart patterns. Tuesdays, and there's Q&A sessions on each one. Tuesday, investment psychology, my favorite one. That's my favorite class. Then you have market principles, analysis, and sentiment, and so forth. You click live, takes you to the live class. You click video library. It takes you straight to all of the recordings of all of the classes in case you missed them, including the Q&As, including office hours, including a Benzinga Pro lesson that is just for the trading school members. The other thing you have here, it's Mark Putrino's trading chat room. That's something that we were able to incorporate here. Let me just show it to you really quick. These are all the chat rooms you have. Student trade ideas for all the students, strategies and markets, questions for Mark. Those can get answered in the Q&A sessions, right? Or office hours. Mark's trade ideas. You're going to get a lot of trade ideas not sent, but like they're all going to be pretty much in Mark's chat room there. And then the other thing, if you want to, you can click charts, you get your own charts. The other thing, Benzinga Pro is included. So you do get Benzinga Pro. This is what you're looking at in the chart. I'm currently looking at Bitcoin. Yes, Benzinga Pro does cover Bitcoin, cryptos, stocks, and we're getting options in there. But yes, you're going to be able to use this. And I will go over Pro later at the end to show you a couple things that I use to trade inside Benzinga Pro. And the syllabus, Monday to Friday, Monday to Thursday, you have classes from 7 a.m. to 9 a.m. And then you meet again from 12 to 1. That's the same schedule Monday to Thursday. Friday, you just have a office hour session, recap of the week. And any other questions, put them in the chat. But I think we're good with that, Mark. Can you go ahead and take over the screen here?
Yeah.
Anything you want to add there that maybe I missed, or?
Well, I just want to respond to Nancy's comment. Is CRB good to invest in as well? You can't invest directly in CRB, but the good thing is, let me just make sure I bring up the right screen here. The good thing is that there are now ETFs that you're not investing. I mean, I guess for all intents and purposes, you're investing in the index, but you're not really directly investing in the index. You're investing into a ETF that follows the index. So yeah, I mean, long story, no, but short story, yes. These ETFs are designed to follow what the index does. So it's like the same as investing in the index. Now look at this. I'm just, looking at this from a longer scale.
Just a quick shout out here to Nancy, the newest member of the trading school. She joined yesterday.
Yes. Oh, yes. Okay. Oh, hi, Nancy. Yes. I recognize you now from the school. Cool. Thank you. Thank you for joining. So now let's take a look at here. If you had, inflation, this is a good measure of how much inflation has increased. At the bottom of the COVID crash, this particular ETF run by Goldman Sachs, which is pretty, they're pretty good, $8, it more than doubled by June of 21, and now it keeps going higher. So you can't invest directly in them, but you can invest in these ETFs which follow them, which I personally think is a good idea. Because of we're in this inflationary environment. And I think those Tyson chicken numbers were really revealing. And we generally don't really harp on a company or really spend too much time talking about a particular company in the class. Everyone wants to know about Tesla and this or that. Tyson chicken is boring, but it told us a lot, all right, about what's going on. It told us that the street is really missing how much these prices are going higher. So now let's go look at the markets, and I'm going to show you. I hope you're not completely freaked out. I'm not saying the market is going to crash tomorrow, but markets go up and markets go down. When markets are going up for a long time, people seem to forget about this. Now, this is something that we've been watching closely in the trading school. And I actually even told everyone, let's get ready with some ideas tomorrow for a reversal. And here is why. Now, this is SPY. This is an ETF. This tracks the S&P 500. In the class, we call the S&P kind of, the mothership, for lack of a better term. It's the most, it's a really broad-based measure of the market. It has everything in it, technology, healthcare. So this is kind of our starting point. And when they talk about the market, this is the market. It's the broad market. Now, like I said before, there are some price levels that are more important than others. And we can see here that after this big sell-off, which now it almost seems like, 10 years ago, but in the beginning of the year, we had this big sell-off. And when this ETF SPY got down to around 432, what happened? It stopped going lower. What does that mean? Well, there was enough buyers here, or demands for the shares, forces of demand, people that want to buy the shares, that it was able to absorb all of the supply. Markets go down because when the sellers are trying to sell, there's just not enough buyers to absorb all the demand. So there are buyers out there, but they're only going to pay a discount. That forces things down. When we get to a support level, there's enough supply to absorb all of the demand. That makes the market stop going down. Sometimes, like we did here, we get a bounce or a rebound off of that. So lo and behold, what is going on now? We are getting close to this level again. So I think there's a good chance that when we get down here, it rebounds. Now, here's the thing. As traders, we don't guess. I'm not saying, hey, if SPY gets to 432, buy it. Because ultimately, the market is always right. And I'm not guessing. I'm just suggesting or saying or giving an educated and an experienced opinion that stock levels that are important tend to repeat themselves. So there's a good chance that SPY finds support again at this level and it rallies. When the rebound starts, that's when we jump in. We don't try to catch the bottom. If you try to catch the bottom, that is what's called on Wall Street. You probably heard this term, trying to catch the fallen knife. If you try to catch the bottom, excuse me, you're just guessing. No one consistently gets the bottom all the time or the top all the time. If you do, it's just luck. So what do? Well, we wait for a potential rebound. I mean, there's a chance SPY gets down here to 432 and just keeps going lower. Maybe whatever the stuff in Ukraine turns out to really really blowing up, which I don't think it will, frankly. I don't think it has that much an effect on the stock market as people would lead you to think if you look at the so-called experts in the media. But anyway, we're getting close to a level that could potentially be another support level, and the market could potentially rally off it again. So different students can look at this in different ways. The school is not, how does Mark Putrino trade? I mean, I show you my opinions and this and that, but people have different styles. So there are different ways to approach this, right? Say I'm right and the market does rally. Some people are kind of conservative and they would just be kind of content to buying the ETF. And if it goes up, they make a nice little profit. We have some students that are also very aggressive and they're trading options and using leverage, and they might go into an option strategy. We have other students that have a stock they may like. AMD, for example, seems to be bothering. Well, if SPY rebounds, AMD might be a good place to have your money because the percentage move here will be bigger than the rebound in SPY. So I think that when we get down here, and I think it's probably going to come tomorrow or Monday. Tomorrow is Friday, right? Let's keep this in mind because sometimes this is important. Excuse me. Friday is a 3-day, it's a 3-day weekend. A lot of people don't want to go into the weekend with risk. But if we have another day like today, SPY will get down to this level and we could see some kind of a significant rebound. Now, based on what I was talking about with inflation, I still think the market is going to go lower over the next few weeks, if not months. For a while in the class now, for probably about 2 months, we've been using the term stealth crash. All right, a stealth crash. I didn't come up with that. I heard someone on TV who I really respect. I think it was Gary Kalbaumer. I don't know, but someone you see on TV use that term. And here's the thing. A lot of these stocks have crashed. If you look at a lot of these, what's a crash? 50%, 60%, 70%, Peloton. I mean, yeah, it's rebounded a little, but that's a crash. It went from 160 down to 30. That's a crash.
On that topic, Mark. So yes, a lot of these high growth stocks have been cut in half, even PayPal, right? But now you're seeing the big boys start to come down. You're looking at the Nvidias, you're looking at the Microsofts that support, I think. So if we were in a crash, maybe it's stealth, but do you think eventually it's going to go to all the large caps? I've seen Netflix cut 25%. It's just kind of scary to see these huge, large caps take such a dive.
Well, here's the thing, Rodrigo. Companies that have good, solid business models that actually make money will go down, but they won't go down as much as some of these other companies. Like, for instance, Peloton. It's not surprising that Peloton went down as much as it did because it never should have been as high as it was in the first place. This is a company that, loses a ton of money. It's probably, one day going to get taken over by someone else. But we have a lot of these, these so-called meme stocks that were so, favorable this time last year. Like, for instance, let's look at this, right? Lucid, right? Let me see if I can find one that really fits. But like, say, Rivian. Remember when Rivian came out? Everyone was so, gung ho on Rivian Automotive. Well, it went from 171 to 64. Should that be surprising? No. I mean, they lose a ton of money. A company, company that loses hundreds of millions of dollars shouldn't be worth that much. Now, in the way the market works, things can run for a long way either way. Overbought, oversold, bubbles go higher than people think or should, crashes go farther than they should. But ultimately, a company needs to earn money for the stock to have value. This is very similar to the internet bubble in a lot of ways. When I was first coming up, you had, the birth of the day trading. Well, there's no such thing as the birth of the day trading. There's been day traders since there's been markets, but there was like a huge day trading movement back then. And 1999, a lot of people were quitting their jobs to become day traders. And, there's a lot of similarities. A lot of the stocks then didn't last. There's hundreds that are gone. Who survived? Microsoft, Apple, Intel, the companies that actually made money. But I guess my point is that stocks can go down way farther and way much longer than people think. In the stock market crash in 1929, the Dow Jones lost 90% of its value. In the market crash in the internet bubble, the market lost 85% of its value. It's also important to remember, too, that like if we go back to the internet bubble, the tech stocks peaked in March. Financials didn't peak until November. So different things go down at different times. So basically, the garbage leads the way down. And that's what's been going on, right? We have all these companies that never should have been as highly valued as they were, that are losing money going down. People that take their money out of that, a lot of that money ends up flowing into a company that it's like, well, wait a second. Here's a company that makes money. Maybe I should put my money here. So it's kind of like a quasi, like a flight to safety type thing. So the good companies are kind of the last to go
right
down,
if it were to be. Yeah.
But they do go eventually.
Right. So, and you remember SPACs were the first piece of garbage that went down like last February, and all those are still down. Some of those are like $2 now. They were like 40.
Yeah. It was just, like you said, right, Rodrigo, your favorite lesson is the investment psychology lesson. People are subject to this herd mentality, and people lose in touch of reality when it comes to the stock or when it comes to money for some reason. I have seen people that I know, and you guys might know people like this, have friends or family, that they'll, if they want to buy a new dishwasher, they'll spend a week researching it. Where am I going to get the best price? What's the best warranty? For something that costs $500 or $1,000. But yet they'll see some kind of like an idea in a chat room on some meme stock, and they'll just like throw 20 grand at it without even thinking twice. Money makes people do irrational things. It makes us susceptible to this herd mentality. Now, you might be out there saying, I'm not susceptible to the herd mentality. Let's look at other aspects of life, right? This is one of my favorite examples. Toll booths. You're driving down the highway and you come to a toll booth. There's 15 different booths. There's 6 that have a green light on, and all the other ones have the red light on. All the cars are kind of going to the same one. That's herd mentality. If you thought, well, wait a second, that booth up there has a green light on and there's no cars there. Why don't I just drive through there? And then you drive up through there, and then you look in your rearview mirror and there are other cars following you. Now, it sounds kind of funny, but it actually is a good example of herd mentality. That's people not thinking logically. For some reason, that instinctual bias pulls you into that line. If you can separate yourself from that, you can say, hey, man, I could just go up through that booth. It's kind of the same thing with the stock market. if you can get away from the hype and separate yourself and start looking at things logically, like looking
Right.
at these charts, you can start to come up with your own ideas. And those are the people that, that end up doing well. The people
Right.
that are trading on a plan, not those that are guessing.
And to be honest, like when you're starting, it's not like there's, hey, here you go. Here's a manual to not blow up your account, right? It's like, oh, you want to trade options? Here you go. You want to trade OTC stocks? Here you go. So you have to be your own guardian in that sense, right, Mark? And that's where the education is missing. Because if you don't have that education as a new trader, you're going to fall into the emotional aspect of trading. It's happened to me. And it's even 10 times worse if you're doing it alone without a community, let alone the right community, Mark. But I have somebody with a great question from the chat. EB, Mark, what is your honest opinion of what it takes for someone to become a consistently profitable trader? From EB.
Okay. Now, this isn't what most people want to hear, because they think I'm going to say, well, you should use this secret system or you should use that secret system. This goes right back to the investment psychology. The most important rule of trading is understanding that as human beings, we have not evolved in a way that is conducive to trading. So for the vast majority of people, 98, 99%, their emotions take control of them. So I would say the most important thing is, one, having an awareness of that and understanding you're susceptible to that. Two, developing some kind of a simple, logical trading system that takes the guesswork out of it. So you're not following your emotions, you're following reason. Well, let's go back to the SPY chart I talked about here. Okay. Now I'm saying that I think there's a good chance that if SPY gets down to here, to around 432, it finds a bottom and rallies again, because it did here before. Okay. So that is an educated an educated opinion, I should say. I'm not going to try to guess. If I was just guessing or letting my emotions get the hold of me, if it got down here, I would buy it. But there's a chance it kind of keeps going down. So I'm not just going to guess, oh, well, it was where it was before, maybe it rallies again. I'm going to have a logical reason to buy it. And that buy is when it actually reverses and I get the sign that it's reversing. If you're trying to catch the bottom, you're guessing. People guess because, like I said, as human beings, we have not evolved in a way that's conducive for good trading. So I'm not guessing it's going to stop there. I'm just thinking there's a good chance it's happened again. I mean, it's a good chance it happened. It happened before. There's a good chance it happened again. The reversal is something that gives me more conviction. So now I have a logical reason to buy something. I'm not just guessing. I'm saying, all right, well, it found support and now it's rebounding. So, people frankly don't want to hear this kind of stuff. They think that the great traders like the Stevie Cohens or the Mario Gabellis have this like super secret system that is always consistent. And it just doesn't work that way. Like, how many big hedge funds go out of business every year? And in every market downturn, it happens. We've had this big market downturn. I would imagine over the next few weeks, you're going to hear, oh, this hedge fund went under, this hedge fund went under. I'm just saying that to just point out the fact that, these legendary traders or whatever, they make mistakes too. The secret is not to not make mistakes. The secret is to accept the fact that mistakes are part of the process and that you have to eliminate your mistakes or make them small. If something goes against you, you bail out for a small loss. Something starts going your way, you let it run. And that's really the secret.
Yeah.
And that comes back to the market psychology thing that we were talking about, that the class is going to be on Tuesday.
Yeah, and it's you're absolutely right. Look at Jim Chanos. That guy lost like 9/10 of his money shorting
Oh,
Tesla. Like
I haven't heard that name in a
he
while.
doesn't
Yeah,
even
he
have
was
to file.
10
He
years
doesn't
ago.
have
He was a superstar.
right, and he doesn't even have to file his holdings anymore because of the the account dropped so much. He never acknowledged that, hey, maybe shorting Tesla is not a good idea. So all these guys are out of business without a fund, and it happens even to funds. It's not just to retail traders, right, Mark? It happens to funds too. They go
There's
belly
no
up.
doubt about it. Yeah, there's no doubt about it. And I think this is an important thing to understand. Like if we go back to, Chanos and other people, I think a lot of beginner traders are people that are kind of under, this spell of Wall Street, or so to speak, or, the spell of the great managers like the Stevies Cohens or the Ray Dalios. They, it's like I said, they think they have like this like secret system that some way they can fall upon it and it's going to happen. It just doesn't work that way, right? Like think about this: who's like the greatest baseball player of all time? I don't know. A lot of people would say Babe Ruth. Did you know that Babe Ruth also has the record for strikeouts? Babe Ruth, the greatest baseball player of all time, struck out a lot. So if you think you're going to get into this and never have a loss, you're not going to be successful. Losses are part of it. You can't control that. But what you can control is not having big losses. If you have a little loss, you get out, you reevaluate, maybe you get back in. But that's the hardest thing about trading. People think that trading is a chess game. A lot of people think that trading is mathematical and it's chess. Well, if you play chess, the rules are always the same. The bishop always moves the same way. The knight always moves the same way. That's mathematical. That's surety. The stock market is not like that. The stock market is like a poker game. And when I say poker, I don't just mean you're gambling. I mean that there is a human being on the other side of the trade that is susceptible to emotions just like you are. A great poker player knows that what works today might not work tomorrow. They have the flexibility to change what they're doing. So, I see that a lot with people that don't understand the market or with newer traders. They think there's some, secret mathematical system or whatever. And, that's just not what it's about. It's about understanding that you are here to make money. These stocks are not your friends. You use them to make money, right? And if we have a situation like this, where I'm talking about how there's a good chance SPY rebounds off of this level, well, it might get down there. It might go all the way down to say 420 and come back and get above 430. We get to 433. Then I could say, all right, well, the rebound is going on here. I'm going to jump in and I'm going to try to ride it higher. And then say it goes to 440 and I get out. I just made 7 points in a couple hours. I made money. Was I right? Yeah, I made money. But was I really right? Did I buy it at the exact bottom? Did I sell it at the exact top? No. Successful traders understand that these stocks are tools. You can't fall in love with them. You can't get emotional with them. It's like,
Yeah.
dude, if you were a carpenter, right, and you had a hammer, do you fall in love with your hammer? Do
No, but these
you
companies do a great job of making you fall in love with them.
that's one of the problems people have. They get an emotional attachment. If you're a carpenter and you're in love with your hammer and you're taking it out to dinner, you got some issues. It's kind of the same thing with stocks. You should not fall in love with your stock, whether it's Tesla, whether it's Facebook. They don't care about you and you shouldn't care about them. They're just tools to make money. Overbought, reaches support, chance it bounces. Now, I'm kind of joking around here a little bit, but this is a real thing that investors face, especially if a stock has done well. You might say, all right, I'm going to buy ABC at 10. My friend, told me it's going to go to 50. Say your friend is right and it goes to 50. So you have this huge return now. All of a sudden, you're like in love with the stock. It made you a lot of money. But you need to have an exit strategy. How are you going to get out of it? You can't just hold on to it for the rest of your life. At some point, you need to turn that into money so you can use the money that you're trying to make to do stuff like buy a house or buy what the hell, go out to dinner, whatever. So people have to have an exit strategy. And in a situation where a stock goes from like 10 to 50, you might say, all right, if this thing drops by 5%, I'm going to sell it. And I'm not going to get the exact top, but I'm going to capture my gain. I've seen over my career so many people that have these big gains and they fall in love with the stock. And I say, now it's time to sell. And then I see them 3 months later and it's like, oh, dude, you must have had a killer profit on XYZ. You're buying drinks tonight. Well, I still hold it and now I'm losing. So now you got to buy drinks tonight. And, I'm not just joking around, but we have to be careful about that sentimental attachment. It makes us sometimes hold on to our winners for too long. It's kind of analogous to being in like a bad relationship. If you're dating someone and it's a bad relationship, you hold on for too long. You try to relive the glory days. The same thing happens when something's going down. Oh, I bought XYZ. I really love it. If it gets down 5%, I'm going to sell it. But it gets down 5%. And you're like, I've put so much research into the stock. I've spent so much time following it. I've looked at all the articles on Benzinga. I've looked at the chart. That's called sunk cost bias. That causes people to just hold on to it while it keeps going down. When you should have just sold it when you got down 5%. So now, this is to the next level, I guess. So it's not really exactly beginner trading stuff, but this is really what is important. The difference between the people that are successful and not is the psychology. So if we bring that back another step, how can you master your psychology? Or no, you're never going to be able to master your psychology unless you're like some, Zen guru, 13th degree black belt. But what you can do to help you is to have a logical reason or a model or some kind of a model is a set of parameters that needs to be met to enter a trade. Something's really oversold. One of the things me and the students found today, Rodrigo, was this. The stock peak.
There's another trade idea from the school?
Yeah, it's a trade setup. It's not a trade idea yet. Well, it is an idea.
In progress.
It's a setup, but we haven't had the trigger yet. The trigger is what tells you to get in it. The setup is a set of parameters or a set of conditions that must happen or should happen for you to put it on your screen to get ready to pull the trigger. If you were like a racer or race car driver, the setup is the get ready, get set, but we have to wait for the go. Now, with this particular stock here, Patterson Energy, I don't really know anything about it. I'm not very familiar with the company. I've heard of it before. But we see this thing here has made this monstrous move higher. It started going up on their earnings, but after looking at their earnings, I don't really see anything that justifies why the value of this company should be up, 30% in a matter of days. So what do we have? Well, we have something that looks like it's out of equilibrium. It's the momentum is to an extreme, right? So it's a potential idea. It's something to put on our radar screen. We're not purely guessing. We have an idea that there's a chance this might reverse based on the fact that things that usually go like this, or things that go like this, usually come crashing back to earth. Now,
Okay.
that may not happen. So what we have is a trigger. This level here around 1360 has been important. It was where the stock closed on Tuesday, and it was the low trade today and yesterday. So if PTEN gets back below this level, and it looks like it's going to stay below it, I think there's a good chance it comes crashing back to earth. So this is a potential trade idea, but it's not based on a
ready yet.
guess. It's based on the dynamics of what's going on.
What's
with
going
the
on in the
stock.
school. So like a random student, right? Any student could just be like, hey, Mark, look at this. Look at the stock that I think could be a great trade idea that I found on my Benzinga Pro, because they get it, with the school. Then he comes in the chat or in the live sessions, you chop it out with them, and you are waiting to see where the chips fall, because you don't want to rush to make the trade, right? A lot of new traders rush to the market. Pretty much sounds like we're rushing to lose money. No reason to do that. But I want to give a shout out to Roy and Nelly for joining the Benzinga Trading School.
Thank you.
Welcome, folks. Welcome to the family.
So, good idea if you're trading is, you do your research, you look at your charts, you have a bunch of things like this. Maybe if you could come with 5 or 10 things that look like they're really going to move, things that look like they're going to have an imminent move, something that's trading sideways. Like if this was back here, if we were in October and we were looking at the same stock, it's neutral, it's in the middle of the range, it doesn't really look like anything's going to happen. When we see something like this, it's like, whoa, what the hell's going on here? Clearly something is going on. But that's just enough to tell us to get ready. It doesn't tell us to do things. For all we know, tomorrow, this thing blasts off to 20. And we still keep it on our radar screen. Maybe the reversal doesn't happen until it gets to 15 or 16 or 20 or 22.
Right.
We look for things that are out of equilibrium. The stock market is ultimately a supply and demand game. It's a game of supply and demand, equilibrium. If there's more demand than supply, goes up. If it's more supply than demand, it goes down. These charts, if interpreted correctly, give us insight into that. Now, when we get a stock that jumps up like this high, if there's no valid reason for this, the supply is going to overcome the demand and knock it back down. So these are things that we look for as traders. And, it brings us right back to that whole Tyson food idea.
So, Mark, basically in this case, let's just say as an example, the trade works out or it formulates into a trade. You provide more details on that, or if there shouldn't be a trade. So that means that if the student that we were talking about earlier gives you a trade idea and you 100% absolutely are like, no, stay away from this, man. Like you're also helping them, not just with knowing how to make profitable trades, but how to not make, I don't want to call them silly, but like, mistakes that we all do when we're new to trading.
Well, you know what? I give my honest opinion, and I'm not always right, but I give my honest opinion. Like this is what I see. And we have a good dialogue, I think, within the class. And, sometimes the students are right and I'm wrong. But, most of the time, I think my experience and guidance helps them out. But if someone comes up with an idea and says, hey, Mark, what do you think of this? I think this is oversold and it's at the support level. I might say, well, it's not really at the support level yet. It still needs some time to go. So I give my honest opinion on everything. And I will say that we have a really good sharing of ideas. And some of our best ideas have actually come up from students. Students says, hey, Mark, look at this. Hey, Mark, look at that. That was one of our really good ideas here with this stock Twilio. Now, this was not on my radar screen. It's not a stock I usually check. But we have a student who is very active and very smart and has given us other good ideas. Said, hey, Mark, let's take a look at this Twilio. This thing has really dropped, and it's found a level that was support in the past. That was on this day right here, October 27th. So we're going back a few months now. This is only a month after the trading school started. But if you go to the video library, you could go, you could hear all the logic and all the reasoning behind it. Well, one of the students said, hey, this thing has had a big move lower. It's oversold. It looks like it fell to a level that was support before. Isn't one of the principles in the trading school, things that are oversold that get to support tend to rally? So it's like, all right, yeah. So we looked at that. Then we did a little more, delving into it. And some other students said, wow, look at the volume. Generally, we don't pay that much attention to volume with our, with what we do. Because frankly, I think most of the time it really doesn't have that much of an effect on the price. But in a situation like this is the volume here. Now, this histogram is the volume. On this particular day, it traded almost 22 million shares. This was a really big day for this thing, the biggest day it's had in years. So why is that important? Well, this is something that we call a capitulation volume. Basically, what happens is those sellers up here are trying to get a better price. They keep waiting for the stock to come back. Say you're some hedge fund manager or hedge fund trader, got 1 million shares for sale. Well, you sell 100,000 here, 100,000 here, 100,000 here. You keep waiting for it to come back. You keep thinking, I'm going to get a better price. But then this news comes out and it's way down, and you say, you know what? Forget this. I just want to get out. Tell your broker, I don't care about the price. Just get rid of it. Make it go away. I hate this stock. As a result, you get these big volumes. So what does that mean? Well, when that happens, there's a good chance the sellers, so to speak, are flushed out. The sellers are gone. There's a lack of supply or sell orders. So when people start to realize, well, wait a second, this news wasn't as bad as people really thought. There could be a buyer. So at this point, buyers start coming back into the market. They can, this move was an over exaggeration based upon the news. The news wasn't as bad as we think. So they come back into the market and they look around for people to buy the stock from. And there are sellers, but because there's a lack of supply, the sellers start saying, well, I'll sell it to you, but only at a higher price. It's at 290, I'll sell it to you at 295. It's at 295, I'll sell it to you at 300. That's what makes the price go up. That's the definition of a rally. There's not enough supply to fulfill all the demand. Now, this got to our price target at 312. Why did we pick 312 as a price target? We didn't just guess or, use some, random mathematical process to figure it out. Levels that had been support can become resistance. And this happens because of buyer's remorse. Think about this. A lot of investors bought Twilio here in September around 312, 313. Stock went higher. They're loving life. All of a sudden, this news comes out and it goes below their price. Oh, and by the way, where did we find support? At a price that was support in the past. Okay. Now we have these buyers that once the price goes lower, they become remorseful. And a lot of them decide, I want to sell, I want to get out, but I don't want to take a loss. So they put their sell orders at the same price they bought at. If there are enough of them, the level that was support turns into resistance. And that's what happened here. So this was, so we bought here, we sold here. This was an official recommendation. Not that there's an official recommendation, but it's something I encourage the students to get in on, which I think I'm probably going to do tomorrow if SPY gets to the level we talked about, if it starts to turn. This isn't a sign in for your idea of the day. This is like learn how to think for yourself class. That's how I want to keep it. But anyway, so this ended up being a textbook example of a trade that was just based on simple principles. The stock got oversold, it reached support, it rallied, it reached resistance, and we sold. we're not doing quantum mechanics here or anything super sophisticated. We're just sticking to the basic principles of financial markets. In financial markets, there are certain levels that are more important than others. For whatever reason, for this stock at the time, 283 was an important level. It was support, and it was support, and you could even see how it converted into resistance here. For whatever reason, 312 is an important level. Why didn't it stop at 313 or 314 or 311 or 310.90? We don't know. We don't have to know. We just have to know that this particular level is important. So I think, Rodrigo, that this is a really obviously they're not all this perfect, but I think this is a really good textbook example of what we're trying to do. Making money off of inequilibriums in the market, or things that are out of equilibrium in the market.
Yeah, and I mean, doing this for 20 plus years, Mark, it's kind of comes natural, to you, I assume. But well, look, we've been here for quite some time now, giving you guys trade ideas and things like that. I know that, Mark, you're super busy at the school and you have lessons planned out, little bonus things here and there for them. How are you doing with time? Because I know that you're always back with the school and things like that with your lessons.
Yeah, I'm good, man. If we got some questions, let's take some questions. But instead of just random questions like, Mark, what do you think of this? Mark, what do you think of that? Let's see if we can get someone as, hey, Mark, do you think this is a support level? Do you think this is a resistance level? If people have the ability to post charts, I don't know if they do, or they could just ask.
Okay. And we can make it a mini lesson for them, right? So
yeah, sure.
All right, guys, ask some questions like Mark said, right? We're gonna see which ones qualify here. But yeah, we're gonna wait for the questions to go there. Maybe we can also do like a couple tickers too, Mark, right?
Yeah, no doubt.
Okay.
What are you looking at, Rodrigo? What are you looking at?
What am I looking at?
Forget the viewers. What is Rodrigo looking at? This is what
I was looking at NVIDIA, but I'm not looking at that anymore. I'm not, right now, I'm looking at the inflation stuff that you had brought up, all those indexes. I don't know where the market is going right now, but that's really why, I tune into the school early. I go and see what you're talking about, where you're moving, what direction. But like you said, if inflation is going higher, I'm trying to stay away from the growth names. But
all right, let me show you why the market has made these big moves lower. Let me just show everyone this tech sector before we sign off here. And I think I kind of said on the way coming in that, this has been a relatively easy market to trade for technical traders. Now, let's forget what's going on in the Ukraine. Let's forget inflation. Let's forget everything. Pretend all you looked at was charts, right? You were on a tropical island and you got no, for some reason, your internet accesses charts, but it doesn't get the news. I don't think our analysis would really be that much different. I think that this holding in Ukraine is a horrible thing, and maybe it affects the oil markets. I don't really think it affects the stock market. So here's why we were waiting for a move lower. All right, so now we're going to go back here to January. This is January 1st or whatever. We come into the year with a big move lower. And what happens? We get below this level that had been support. You get all the way down to here. What happens? We find support at a level that was support before. Some levels are more important than others. We get up here, and what happens? The tech sector. What we're looking at here is the tech sector. XLK is like a broad measure of the tech sector. So we get up here, and what's going on? There's resistance, buyer's remorse. Investors that bought here, a lot of them regret their decision when it goes lower. So they decide they want to sell if it gets back to their price so they can get out at break even. For that reason, there was resistance around this level. Now, let's bring us up closer in time. We fall back through here, and this is Monday, and we get up to here, and what do we see again? A level that was support becomes resistance again. Smaller scale, same principle. And when we knew tech wasn't going to get through this level, it told us that there was a good chance we would have this big sell-off today, and that's what happened. So again, I think once we start getting down to this level, this is tech again, not the S&P. We're going to start looking for a rebound or some kind of a tradable rally. Not saying
Right.
we're going into another huge bull market, but there's going to be enough movement, I think, over the next few days to make
Understood.
money. So that's what
So,
we're looking at tomorrow morning at 7 o'clock.
okay. And let me take you back to August 20th. August 20th something. We were
Yeah,
doing
you're
that.
talking about, I know what you're talking about. You're talking about
Yeah,
oil.
we were doing a live presentation here with Mark before, I think it was even before the actual trading school launch. We had the real OG first school members there. And if you were here and Mark pretty much called the bottom on oil at 60. And then from there, everybody that was enrolled in the school went and bought all these like oil stocks. So imagine if the ETF went up, I don't know, 20, 30%, those stocks must have been up 50, 60%.
Yeah, some of the bigger companies move less, but we look for the smaller companies that are going to move more. And that's what happened here. So this is oil, and this is what Rodrigo is talking about. And let me just find our simple momentum indicator here, which was our signal. So now what we're looking at here is oil. All right. This is the price of oil per barrel. Right now it's trading just below 90. So I've mentioned it before. One of the principles of financial markets is stocks or commodities that are oversold that get to support tend to bounce. This is where we had that webinar, Rodrigo. It
Yeah.
was the weekend in August here, because August 20th was a Friday and August 23rd was a Monday. So I think it was either that Saturday or that Sunday. And this is what I talked about here. Again, I'm not patting myself here on the back. I'm not taking a victory lap. I'm just trying to explain to the students that are potential students, hopefully they will be students, that it's not as complicated as it needs to be. What happened here? Or it's not as complicated as Wall Street makes it seem like it needs to be. Have support here. Levels that were support can become support again. We go into this sell-off. What happens? We get oversold. This particular indicator down here indicates oversold conditions. We find support and we rally. Oversold markets that get to support tend to rally. Same thing happens here again in early December. This big move down here is the day after Thanksgiving with the Omicron thing. But what happened again here? Got oversold, dropped to a level that was support, and a rally ensued. So, I can't say it enough, Rodrigo. It's like it doesn't need to be that complicated. Oversold at support, there's a good chance it bounces.
And okay, so we went to the past. Let me take you to the future now, Petrino. All right. This is what I got. US oil inventories. Let me pull this up. Plummet on bullish demand. Production storage enters draw season. So where is oil? What are your thoughts on oil now? We were in August, like you nailed there. Okay, we got it. What do you see happening in oil?
I think oil goes lower, and
With the
here is
Russia
why.
thing happening too, all that.
There's all this stuff going on in the Ukraine, which frankly I think is a complete, over exaggeration in terms of what it's going to do to the stock market. Because let's think about this. All right, obviously, if it turns into this global conflict, it's going to be a bad thing. And it's a terrible thing for the people over there that have to suffer under it. But in terms of the stock market, if Russia invades Ukraine, is that really going to influence how much money Apple makes every year? Is it really going to influence how much money, Microsoft makes every year? I don't think it's going to have that big of an impact on our market at all. And frankly, the stock market moves over the past few days, 90% of the time, market moves are based on technicals, stuff that we were just looking at, overbought, oversold, an important trend, or level breaks. It's very, 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 very rare for some kind of a story to actually influence the stock market. That being said, inflation is one of them. But me and the students kind of had a laugh today about this whole thing because we were talking about it. So the main headline in the market yesterday was like, oil up on, Ukraine concerns. Okay. Today, or well, yeah, today, this is oil never stops trading, but on the close of the exchanges today, oil had this big move lower. Why? Well, it broke its uptrend. If we didn't know anything about the Ukraine, we would have had the same look at this thing. The uptrend got broken and fell. So here's the media yesterday: oil up on, Ukraine tensions. What happens today when we have a drop of, almost 4%? Oil stops going down on Ukraine tensions. Most of the time, the market is not moving based upon what they are telling you in the media. The media thinks that every little move or shift or change is based upon some really important fundamental thing. And 90% of the time, that is not the case. If we went over the same analysis over the past week, and no one even told us that anything was going on in the Ukraine, this trend line told us, I think this trend break said oil is about to go lower. The support break told us. I mean, we could debate it, I guess, till the end of Kingdom Come, but in my opinion, the technicals are the vast majority of the time more important than what they're telling you in the media, right? You just saw it with the technology breakdown. Say the Ukraine situation wasn't going on, the media would just find something else to pin it on. Oh, this or that or the other thing.
Yeah. Okay. All right. Well said. I honestly think that, maybe like Russia is like an oil country, right? Like, they make money if oil goes higher. So I don't know if there's something there.
I think it's maybe affecting the oil markets, but I just don't think it's affecting our broader stock market as much as, the media would lead you to believe.
Okay. All right. So switching here, Intel CEO saying that he can be the next great growth story. What are your thoughts on Intel, and how do you compare them to the other fellows? The Nvidias, the AMDs, all that.
Well, let's take a look at it. Intel is a stock that historically has had very clear levels, right? And let's go back to our, hindsight's 2020, but I just kind of want to show you guys how certain levels can be more important than others, right? So this is Intel in 2020 through April of 2021. Look how clear this resistance was at 68, right? You don't need to be a market guru or someone traded at SAC to see that that's a clear level. You can see the same thing on the downside here too. Look how clear the support level is. This is 44. Again, we're going back in the past here, but it's just an example of how important levels are. And that's one of our classes is basically just, levels, how to identify important levels. Now, if I look at Intel now, it looks to me like, once again, it's at a support level. Not a major support level, but, right around this 47 level. It looks like it's hanging, but, based on what's going on with the market, I think there's a good chance it breaks this level and then kind of revisits down here. And at that point, maybe there's a buying opportunity. So I would say this, like, to me, it looks like Intel is at short-term support. It looks like it's probably going to break. But if we get down to this longer-term support, then it goes on the radar screen as a potential buy idea.
Yeah, because I heard that Intel makes more money than a lot of them combined, but it's just the technology there. But Nvidia has some pretty good earnings. What are your thoughts on Nvidia?
Well, as when we look at the technicals, it's like the chart always, is kind of more important than the news, because the chart never lies, right? And if Nvidia, maybe they reported some good earnings, but whatever it wasn't enough to get it back above this level here. Let's call this 260. Let's call it 267. Support becomes resistance. We see that here. You can see that a lot in the market, right? We have people that bought back here. Stock went lower and they regret their decision to buy. So they decide to sell, but they don't want to take a loss. So they place their sell orders at their buy price. So, whether NVIDIA earnings were good, bad, or indifferent, if I didn't look at them, I just look at what the stock is telling me. And the stock is telling me that, whether it's good, bad, or indifferent, it's not enough to have gotten the stock through this important level here.
Yeah, that's a great lesson, like on earnings, that you can have killer earnings, but it doesn't mean the stock has to go up, right? So
yeah. All right. So listen, Rodrigo, I apologize to everybody, but there's so much going on in the market. I really want to, well, actually, I'm going to have dinner, but after I have dinner, I really want to spend a couple hours tonight going through, these markets, because sometimes market action isn't that important and you could take the day off and go to the beach. Sometimes market action is important because it sets the trend for the next few weeks or months. And I think that's kind of where we're at now. So these next few days or few weeks are going to be really important. So, I invite everyone who's listening to please, give the trading school a try. I mean, seems like the vast majority of the students like it.
yeah, we were getting tons of questions here, and I don't think we could go over all of them at once, but like literally that's what you do all day, right? Like Monday to Friday in the
Yeah.
school with all the fellas. So yeah, I mean, to me, it would help me a lot. I wish I had it when I started. These discussions that you and I are having, they go on all day in the school. So that's where you can find that, folks. But yeah, it's been pretty good here, Mark.
All right, everybody. Well, thanks for tuning in. Thanks a lot, Rodrigo. And I guess Rodrigo, I'll catch up with you tomorrow morning.
Yeah, I'll see you in the school, and I'm gonna stay here for a couple of minutes, guys, showing you the school and Benzinga Pro. We'll go over a couple stocks and look what they have in the news. But Mark Putrino, Chief Educator at Benzinga Trading School. I will see you tomorrow at the school, man. Cool stuff today. Great class.
All right, everyone. Thanks again. Have a good night.
All right. All right. 1 second, folks. Let me share this stuff. Okay, I think we got it. So let me open the chat and get set up. I'm showing you the school, then I'm going to show you the pro, and we're going to go over some cool stuff there. Stuff that you can use to trade. And it's all included in the trading school. That's correct. Everything you'll see today is there in the trading school. Yes, Nancy, you can ask about stop losses, all that stuff. Absolutely. And okay, guys, so this is the general trading school, right? This is the benzinga.com/school. I'm going to go ahead and click home. You can see you'll have what classes are there for tomorrow, and you have the office hours. You can, well, these haven't happened yet, but they're tomorrow. But you can pretty much forward here to the next day and see what's tomorrow and plan your week ahead. So tomorrow we have chart patterns at 7 a.m. Eastern. You can save it to your calendar there too. And you have a Q&A session right after the lecture. So from 7 to 9, you have the lecture, you have a Q&A, and then you have a full review from 12 to 1. So this is just for you to get a glimpse of what's going to be going on, happening, like for the rest of the week and all that stuff. If you click live, it's going to take you straight to the live class. I'll do it just to show you. Right now, there's no live class, so it's not going to show me anything. The live class is tomorrow. Let's see. And if I click video library, it's basically going to take me where all of the library sessions are, where all of the recordings are. Let's go here. Okay. So this is where you can find the lesson from today, from yesterday, 2 weeks, a month ago. The Q&A sessions as well, they are recorded. And I want to show you something really special here too that is also available just for the training school students, right? You're going to have, where is this? So you have a lesson right here. It's literally a lesson for Benzinga Pro, and it's going to show you how to use Benzinga Pro. So we have that lesson. All you guys can go ahead and view it. We do it once a month. And also you have me right now, and I'm going to show you some cool stuff too that you might not see there. So Ravi is asking, what's the school time? 7 a.m. Eastern. Yes, that's when it begins. Actually, maybe it's a good idea. I'm going to go over the syllabus really quick, guys. So Monday to Thursday, you're going to be viewing one of these chapters, right? Investment psychology or market principles, analysis, and sentiment. Let's go to the homepage so it's easier to explain. So in the homepage, you see today's Friday. Every Friday, Fridays, you recap what happened on the whole week. So as you can see for tomorrow, because today's Thursday, tomorrow's Friday, you're going to see that the office hours are scheduled. And that's where you recap the whole week. Monday, right? Monday to Thursday, you're going to be viewing a new chapter every day with a Q&A session. On top of that, you're going to be viewing it with the um, analysis that you'll have at noon. So you're meeting for about 3 hours, for about 3 to 4 hours a day in live classes with Mark. So what's the price of the school? Samuel, we have a 70% off special just for tonight. You get Benzinga Pro, you get a free laptop, and you get the full lessons, full recordings, full Benzinga Pro lessons, trading chat rooms from Mark Putrino, 70% off. So you get that till midnight. Ravi, so yeah, this is just going over Ravi's question here for the schedule. So you see that Monday, Tuesday, Wednesday, Thursday, you have a class. Friday, it's a recap. On Tuesday, you'll have the investment psychology class. That's my favorite. Don't miss it. And then you go Wednesday, you have something else, and so forth, right? That's pretty much how you'll go through the format of the 8 chapters that you have. So back here on the top, I'm going to click chat. All right. I click chat and a bunch of chat rooms appear. And it's important to know what they're all for. So student trade ideas will go in this chat room where it says student trade ideas. If you have research, you can share it with your classmates, with the other folks there, and chop it down and help each other. Ultimately, this is a great community. You're missing out if you're not engaging with the community there. Strategies and markets, questions for Mark. If you have questions for Mark, he has answers for you. And that's why we have Q&A sessions, office hours, all that stuff. Mark's trade ideas. This is where you can find all of his trade ideas, right? You have general discussions, people posting a lot of things there, and class files where you can take quizzes, okay? Quizzes on every chapter. You want to test yourself? This is the best way to do it. Take those quizzes, right? The other thing I want to show you, we went through the chat rooms. Now I want to show you the charts. This is a very, very great chart. I use it so I don't have to go anywhere. I stay in the trading school, and it covers the full screen. And I'm a chart guy like Mark, so I do like charts, and this is beautiful. So just a big chart. That's all I want. Then you have the Pro button there, and that takes you straight to Benzinga Pro. So let's go to Pro really quick, and I'm going to show you guys this. Is there any other time for Pacific? No, Rav, but the classes are recorded. So if you do miss them, you have full access to watch them whenever you have time. Some people have a 9 to 5, some people are busy. They pop in there to watch the recordings. It works for people. It works regardless. That's why the recordings are there to help you. And the Q&A sessions being recorded is actually amazing, because if you have these Q&A sessions and you really missed the class, you're basically going to get everything that you missed. So we are in a live webinar right now, and the goal here entirely is to just give you guys a better idea of how to take advantage of the platform of Benzinga Pro and of the trading school. This way you can fully leverage the entire course and platform, because you can give somebody like $1 million and they blow it up the next day, but then you can give somebody $1 million and they do something amazing and turn it into $1 billion. So you can have the same tools, but it's really what you do with it. So with that in mind, let's go ahead now and move to the Benzinga Pro. That's where we have a lot of these great new tools that we've been putting out for you guys. I will show them to you, and there's a lot more that we're working in the background that I cannot tell you. So Ravi asking, can we try? So yeah, this would be annually for the school, Rav. But if you do the math, really, I mean, like 1,300 divided by 12, you're paying like $100 a month, something like that. So, and you're getting Benzinga Pro on top of that. You're getting a free laptop, right? Like that's, and then you get the full lessons, full recordings with a former hedge fund manager with 25 years of experience. So
I think that fits the bill, Ravi. You know, I think it's a good deal. So let's move on here back to the pro guys. Um, all right. So I have a main chart here. I'm pulling up NVIDIA. If y'all want me to look at something else, let me know. I know that there was another ticker that someone wanted to see. William. Yeah, William, I totally get it. If anybody needs a payment plan or anything like that, I can work out something with you guys. So just let me know. And if any of you guys need a payment plan, let me know. I'll reach out. You know, I'm human, I understand. So it's a noble cause, right? You're trying to educate yourself and all that stuff. So I'm down with it. All right. If somebody needs help with a payment plan, reach out. I'll put my contact in the chat if anybody does want to reach out or has questions on the school. All right, folks. So we're looking at NVIDIA, right? This is the details tab. This is where you click. It takes you to this page, the same one that opens on the next. So I already have the window open, so I'm just going to close it. I just want to show you how I got there. And then you click on the chart. And this is where I am right now because I click chart. But by default, it's going to take you where it says overview. So in this part, you're going to have some information on the side. So on the right side, you could see the company and industry quotes. Look at this: session volume, average volume, super important. Short float, short percentage of the float itself, the industry, comparing it to different industries as well, and the performance, right? This is all about giving you data in a concise, organized manner that becomes actionable trade ideas. Key ratios for those that like to look at the PEs and book value, EBITDA, all that stuff. You can look at peers. That's a great sympathy play way. Their earnings, and if you don't know what they do, there's a great description there of what they do. So in short, this is the overview tab. You have news there as well. If you just want the news, you can look at that there. You have a calendar. This is another great tool that you can actually build on this, right? But these are all the little things that can help you with Pro. Let me show you something else that I have here. It's a new tool, all right? A lot of you guys maybe haven't seen it. What's my platform? My platform is Benzinga Pro, Catherine. That's the only thing that I use. I don't use anything else. I don't use any other brokerage. Well, I mean, Benzinga is not a brokerage, but I don't use the brokerages, like the main typical ones for research. I only use Benzinga Pro. So back to this tool, guys. We have aggregated hundreds of thousands of SEC filings, and we have the technology basically to scan through them and provide you organized information. What does that mean? Look at this: multiple insider buys. That means that we have been able to scan hundreds of thousands of these SEC documents, and we pretty much found the companies that, when there are multiple insiders buying, so you have a CEO, a CFO, a president, a chief marketing strategist, a VP of sales, VP of business development. You have all these different people in the board or in the high executive position buying stock. So that's a pretty bullish sign for me. I'm not telling you to go buy everything there, but it is really positive to see that the executive team is putting their money where their mouth is. And that, to me, as a trader, as an investor, that's how I look at it. So it does build some confidence, but keep in mind, this is only where you start. This is the beginning where you are starting to look for trade ideas. I'm not, like I said, I'm not telling you to go buy all of them. I'm just saying, if you want to find trade ideas, instead of buying whatever's trending on StockTwits or Robinhood or any of these places, you need, and you want to do your research, this is where you do it, right? You don't do it in these social media platforms because trust me, you're the one buying at the top. So you could see multiple insider buys, insider purchases when you have only one individual, only one executive buying. You have the same concept, but for penny stocks. So stocks that are under $5, and then you have insider sales above 100,000. So the same concept, but when there's insider selling. Let's see a couple questions here. Ellie, can the Benzinga platform connect with a broker to place trades? I know that there is some portfolio integration. There are some really exciting things happening, and you guys will know about it very, very soon. Ellie, great question. Kaz, how long does it take from insiders buying notification before it gets uploaded to Benzinga? Everything here is live, brother. Okay. Everything that you're looking at this in Benzinga Pro is live. We can update this right now. Look at this. You see this little refresh button right there? It's refreshing. And then we're going to have last updated right there, 5:26:40. That's the time there. Now you see the time there, it's 6:40. And that's the time right now. So this has been updated till 6:40. And you have, so laser, I don't know if you guys saw this, but laser was like number 3 or something like that. Like it was a little bit lower. Now it's at the top. So it looks like there is a bigger quantity of these stocks being purchased, something of that nature. But it tells you who bought it here. You have the insider name, you have their position. I mean, this is as like, gritty as you can get when you really want to find the details. So it's right away. It's right away, Kaz. The price of, yeah. So I mean, it's all together, Catherine. If you get the trading school, you get Benzinga Pro, and you also get a free laptop. You get all the lessons, the sessions, the mentoring with Mark Putrino, the former hedge fund manager. The instructor at the trading school. He was here with us. And you can see a couple other things, but we're going through everything here, Kath. So yeah, just wanted to show you that app. I'm moving to the next one. The calendar is another great one that I like to use. Reason is because you can make so many things with it. You can filter it by your watch list or let it run wild. I do both. And you can look at many interesting things here, like retail sales, M&As, IPOs, like upcoming, FDA, economic calendar, super important. If you don't know what an economic calendar is, I suggest you go look at it right away and use it like your actual calendar. As a trader, like you can't just wake up and trade whatever's in your face. You need to know what's happening this week, the next week, and the month before and after, because all of these things matter. They're not just, people don't just meet for fun. There are serious economic numbers that go out and they impact certain stocks and markets and sectors. So highly suggest to go to the economic calendar. And let me show you one thing here. We have an analyst rating too here. So as an example, this is filtered by my watch list. Okay, I have a watch list and I clicked here. I filtered it. The name of the watch list is watch list. So that's why it says watch list. But it's already there filtered. So I have these stocks, Facebook, Square, Apple, Snap, PayPal. These are analyst upgrades, downgrades, whatever they're doing, initiation, termination, if they're raising or lowering. And let's see, the most recent one, let's just go to the most recent, let's find some, I don't know, some recent upgrades from these folks. Yeah, Facebook, obviously, let's see, 2022, February 17th. Shopify is here too. We had literally 1, 2, 3, 4, 5, 6. We had 6 analysts downgrade Shopify. 6 analysts downgrading Shopify. Who are these analysts? You're probably asking yourself, who cares about them, right? Well, they move stocks too. So that's why you should care. Here you can see where they're from. Morgan Stanley, Credit Suisse, Mizuho, RBC, Citigroup, Roth, Daiwa, Piper Sandler. These are big places. They're big banks. And you can see the name of the analyst too. And you can also see something that we're starting to work on. This is a very, very, something that's in the works. You can see there's a smart score and an overall score, a total ratio. So not every analyst is able to qualify for a score because sometimes they do an upgrade and forget about it. And there's no point in tracking that guy at that point. But yeah, we're pretty much building a full scoreboard of a ranking of analyst upgrades of the actual analysts, so that which are the analysts that are right, which ones are wrong, if they're accurate with their position and targets, all that stuff. So yeah, that's why I think this is a pretty interesting tool. So you should look into it. It's really interesting. And then we have the scanner. It's the only pre-market scanner that's open, the only scanner that's open pre-market and aftermarket. So for example, I found some great picks here yesterday. I'll show you how you can use this for being a day trader, swing, whatever, doesn't matter. I'm gonna go to 5 minutes. Markets are open. Okay, so after hours, I'm putting the session for after hours. I want to scan, I want to scan the whole session. And I already filtered the sectors that I want my scanner. So that's communication services, healthcare. Let's take healthcare off because I get some biotechs there sometimes. Okay, communication services, information technology, materials, and industrials. We're gonna see what we get with that. And so those are the only sectors that we're scanning right now. Then we have the market cap slider, and we have the price slider. So market cap, I like to keep it from 2 bill and higher. I like to stay away from these low floats. Very easy to manipulate, very easy for you to buy high and just get stuck there forever. They do an offering, you're screwed. And goodbye to your trading account. So from experience, I don't like to trade these low floats. And my goal here is to give you like some tips and tricks and things, like things that maybe mistakes I did, hoping you don't make them. But also using these tools that are super helpful and like a total game changer for me. So market cap, 2 bill minimum, price $10 or above. Like I said, these little low floats, $1 to 50-cent stocks, I don't like them. They're too small, easy to manipulate. So I think I'm comfortable trading a stock that's above $10. I feel they kind of passed that like scam status. Not that they're all scams, but I feel a lot more confident buying a stock that's already broken its $10 mark. So let's see what we find here. We have APPN. I know this company. It's like a coding or some sort of like tech. I don't know if they reported earnings or what happened, but you know what? We're gonna find out here on the Pro. So they had a 14A filed. Okay, and I can read the filing if I want right now, but I'm not gonna do that. So let's do something. Let's make this scanner a little smaller because I want to be able to read my news. There you go. So APN stock jumps 12% aftermarket as earnings street estimates. So we have their earnings here. There you go. APN shares are trading higher after the company reported better than expected Q4 EPS and sales results and issued both Q1 and forward 2022 EPS and sales guidance above estimates. So we know why the thing is moving, why it's moving. Why is that so important for me to know why it's moving? I spent a little bit of time finding out. Ellie, if you can scan for equities with tech, yeah, we can do that, Ellie. I'll show you that in a bit. And there's different places where you can do that. So yeah, good question. So we are looking at AP. And so if you look at this, it took me a little while to find this. Imagine if I wouldn't have Pro. I would have to go try to read, spend 5, 10, 15 minutes trying to do that. In Benzinga Pro, you have this great tool. It's called Why Is It Moving? I'm zooming in so you can't miss it, okay? It's that blue thing. There's a whole department out there that literally is scanning the markets, like actual real human beings that are looking at markets, stocks that are moving, and they are labeling the stocks when they're moving with that news. So that way you don't have to go and try to find out what's happening or find out when it's already up 50%. You can actually see in real time in the top where it says, why is it moving? It's going to tell you why it's moving. And you also get the earnings schedule. As you can see, it's telling you that Q4 earnings were released today after the market closed. I want to show you another company today. It's called Nightscope, KSCP. It's an amazing company. From what I've been looking at it, they have some really good things planned in the background. And also for those of you that are not familiar with Benzinga, Benzinga covers a lot of ground in the stock market industry, really. It's more than just pro, it's more than just, trade ideas. As an example, Nightscope CEO was interviewed today by Benzinga. So to explain this a little better, Benzinga does breaking news. We publish breaking news every single day. Not only do we have hundreds and hundreds of editors worldwide that write articles for our main site, benzinga.com, which is a great resource, but also we do release breaking news for companies, publicly traded companies. One example here, we had Nightscope CEO full interview on our Benzinga YouTube TV live, which is where you are now. And it's giving you the link there. So let's just see what's going on here. let's give it a quick click here. Let's wait for this thing to pass. All right, all right. Um, so yeah, as you can see, where was the interview? So this was a little bit of a longer stream, but as you can see, you'll have the links there for the full interviews. That's AB and Spencer. So yeah, they pretty much interviewed the CEO, and a lot of the things that, breaking news for that are released during those interviews. Now, very important, guys, I'll show you where you can scan just to get Benzinga's breaking news, because as a pro member, you get this before it hits the wire, before it hits the street. The reason is Benzinga Pro is Benzinga's platform. So for us to release this news to our platform, it really is just a snap of a finger. But when it comes to moving this data into other brokerages, which is where you see us a lot, the Weebles, the Robinhoods, the TDs, the Schwabs, Fidelities, all these places that you see Benzinga news, right? When Benzinga is breaking the news, there's a process for that data to go there. We don't own those brokerages, so it's a different process. With Benzinga Pro, you're going to see it there right away, immediately. So you're probably going to have like a 10-minute, 15-minute window. I've even heard longer, but that's how some brokerages are, right? Some things are a little slow and things like that. Cool thing is that with Pro, you get live data. You get everything here that is live. Everything that I'm showing you is literally like refreshed 1 minute ago. So this is a great stock. They had an interview here with Benzinga. This is pretty typical. I'll show you a scanner that you can actually filter and only get the actual news that Benzinga breaks. So Ellie, we're going to scan for some of those things in a bit. Let me show you this. So now I showed you how to find quick trades. Now let me show you how to find good swings. I go to regular, right? I do 1 month. I think 1 month is a good enough time for me to think that there's an established trend here. And then I weed out stocks under $10 and under $2 billion market cap, and I start looking for the winners. 1 month winners to me is it's a good time of amount. It's a good amount of time for me to feel comfortable with the stock, meaning that, okay, for a full month, you have 20, 30, 15, whatever percent gains in comparison to a company that's literally like consolidating and consolidating. There's no momentum there. There's no action. And I'm trying to look for action. You can even scalp like this because you already know that you're buying a company that has been in an uptrend for a month straight. And trends are your friends, right? Until they're not. But in the meantime, you should take advantage of them. So that's what I do. I find a lot of good stocks here. I do research. That's one way that I use this scanner. But I'll show you some other things here too. So that's one scanner. We went through that. This is a signals tool. And I'll show you how I use it. I use this with different types of trading and strategies. For example, I have here 52-week low selected, and I have 52-week high selected. I have opening gaps selected. I took it off right now. You have price spikes and block trades and halts. So when I have the highs and lows selected, it's filtered by my watch list. But if I let it run wild, it's going to give me a bunch of random stocks. So what does this mean? It means that I'm trading stocks that are either hitting resistance at a 1-year level or stocks that are hitting support at a 1-year level. So if they can't hold that 1-year support, you could see a bounce or you could see a rejection or a breakthrough. Like I said, this is a place for you to start doing your homework. It's where you start. Okay. A lot of people don't know where to start. Like, this is how you start. I'm doing it with you to show you how to do it. And then you bring all these trade ideas to the trading school and you chop it down with Mark, chop it down with the other students, right? Ellie sounds like she's the guardian of the stock galaxy. Good one, William. Good one. Okay, so, but yeah, guys, so this is pretty much on a technical level how I would use this signals tool. Ellie was asking me about filtering through other things. So if you want to filter this whole thing, right, which includes halts, it includes 52-week highs, 52-week lows, it includes block trades, it includes price spikes, opening gaps. If you want to filter all those different types of things, you can do that. So let's go here. Add a filter. Okay, let me zoom in here, right? there's a couple things you can filter here by sector, okay, average volume, change percentage, price, market cap, dividend yield, price earnings ratio, share float, shares outstanding, exchanges, securities. I mean, I like the country one because I hate trading stocks that like I end up finding out that they're in some warehouse in China or something like that. So I really only trade US stocks. So I always have that selected. As you can see, if you only like trading the NASDAQ, you can do that too. You can select the exchange and the securities, right? So I only have here for now, just for example, shares outstanding. You know, I could put like 1 billion to 5 billion, you know, and then that's what I'm going to get. So if you let it run wild in the market, use these other filter tools. If you have a watch list, then you don't need it because you already know what's in your watch list, I'm assuming. Then, okay, so that's something you can filter by. And let's go back here. All right, so if you like trading opening gaps, you can do that. These are gaps that open either on the way up or on the way down. That's totally normal. A lot of people really do that and they feel okay with it because it's something that people do specifically. Like I know people that only trade opening gaps or, you know, gaps that are pop on the way down, right? This other one is very, very popular for people that are scalping or trading or day trading. It's halt. So basically it's going to show you every stock that is halted, the time, right? And why it's getting halted. So if you like halts, I mean, I'll be careful, right? You know, they're pretty volatile, but if you're looking for halts, right? This is where you find them. Like there's an actual place in Benzinga Pro that you can find every single stock that is being halted, that it's like gapping up, that has a price spike, that hit a 52-week high or hit a 52-week low. So Catherine is asking, can your scanner offer data from Australia markets? I don't think so. I think it's only US stocks right now, Catherine. So moving on to the next thing, just want to show you guys something really quick. This is the advanced news feed. So Ellie, I know you're asking about filtering. This is where you can do max filtering. So I can filter, this is a news feed, right? I can filter it by my watch list or I can let it run wild. So in this case, I'm going to take my watch list off. So I'm not following anything specific. And then you can see right here where you see screener. All right. So you can screen if you want a stock or an ETF, the exchanges, common, ADR, fund, unit, warrant, sectors, price, dividend yield, volume, market cap, average volume in 14 days, share float. Let me zoom in here. Share float, short interest, short value, short percentage of float, previous short percentage of float, previous close, RVOL, short change percentage, shares outstanding, days to cover, EPS, diluted EPS, return on equity, return on assets, ROIC, current ratio, gross margins, net margins, operating margin. If you want to know about the health of a company before you even look at it, somebody was asking me, how do you eliminate all these like SPACs that make no money? How do you eliminate all these stocks that there's a few things, right? Like you can obviously go through the financial statements, but if you don't want to do that, right? If you don't want to go through the financial statements, literally all you have to do is put in the numbers here that that you're comfortable with, a company with like, 2 billion in gross margin or something like that. Whatever it is that you're looking for, net margin, operating margin, there's more stuff. You can filter by the volume in 1 minute. So or volume 5 minutes. So I could say, I want a stock that has traded 10 million stocks in 5 minutes, okay, before it catches the rip. And I could do, if it's traded 5 million in 1 minute, okay? I think that's good enough price action for 1 minute, maybe. So you can also put the change percentage in 5 minutes. So if I want to see stocks that, I've gone from like 1% to 5% in 5 minutes, like increase like as far as the stock price increasing, you can filter it by that. So that's one filter, right? That's one filter. I'm gonna go ahead and click here on categories. And this is another way that you can filter it. You don't have to filter it by the financials and the numbers. You can filter it by the categories that you're getting. So as an example, I'm going to click on this one that's called exclusives. Remember I showed you that company Nightscope, that Benzinga did like an interview, breaking news, all that stuff. Well, that's pretty much where you find them, right? You just go to the categories and you pretty much get everything set up that way. So let me go back here to the signals. All right. So this is already made for you. As you can see, every stock here that you see, you can see the color in red. It's pretty much done that way. So that's pretty much where you can find the Benzinga exclusives whenever we are breaking the news. The other tool I want to show you guys, it's the ideas tool. It's a new one. So you guys will have this. It will be, you guys will have access to this. So don't worry about it. It's included in the school. So in this case, you come in here, right? You can say like, I don't even know what I'm bullish on Walmart. Let's say I am bullish on Walmart. So you go in here, my position is bullish. Then what is my ticker? My ticker is Walmart. It already has it there, beautiful. And then I submit. So what happens here, right? Not only are you sharing trade ideas and things like that, but you're also sharing trade ideas with other folks that are in the Benzinga Pro community, right? And you can actually, eventually what's going to happen is that these things are going to work as like sentiment indicators where you can go in and see 30% of people in Benzinga Pro are bullish on this stock. 70% of these people are bullish on this stock. And you're going to benefit from that because we're going to pass on that data to you guys, right? Like, hey, these are the stocks that most people in Benzinga Pro are bullish. Things like that. We always try to pass the user the data because we have the data. We just pretty much try to package it for you guys in a way that makes sense via like an actionable trade, that sort of stuff. So yes, that is the trade ideas. The other thing I want to say really quickly, it's the squawk. I don't know. I don't think he's in right now. Let's see. I think it's from 7 to 7 a.m. to 7 p.m. Charlie has been doing this for a very long time, and he's basically going through the news. He's going through all these things as far as like market moving news live in a radio. So you can literally be in your pro or doing something else, studying for your upcoming class. And all you have to do is press play. You can even close this. You don't need to have it open. And then you're going to hear him say something. Right now, it's 7:03 p.m. So I don't think he's there anymore. But that's pretty much the schedule for you guys to use the actual squawk radio. So let's see. I think I went over everything here. I think we went over almost everything that we have on the pro side. So all right, guys, I'm going to drop the contact here. If you guys have any questions on the school, we definitely want you guys to, get better at trading. That's my goal here. If I can save somebody from blowing up their account once, really, that's all I need. So with something really, really cool like this, where you have like a live coach, a live trainer, live mentor, giving you classes 3 to 4 hours a day, plus Q&A sessions, office hours. Like, former hedge fund managers don't take the time to do that, with retail traders. But in this case with Benzinga, we do have a great combination of skills here that are meant to help you guys. So Mark Putrino is a great individual for learning the education. He's very passionate about this. He definitely wishes the best for all his students, just like we do in general here at Benzinga. So I'll drop the contact there, folks, for you one time. If you have questions, reach out. Other than that, I think we're good. We covered everything with Benzinga Pro. This should give you a good idea of like how to use it to start digging for trade ideas and finding trade ideas, and then you do your research along. And really, that's the goal of using Benzinga Pro, using those tools with the beauty of the community at the Benzinga Trading School. So thanks a lot, folks, for being here. glad to be here with you today, going over the pro session, going over the trading school with Mark Putrino, former hedge fund manager. If you want to join the school or have questions about it, feel free to contact us. The details are in the chat, and the link to join is in the chat as well. Deal expires at midnight, so I hope I see you guys there tomorrow. We have a great class. Other than that, folks, thanks for coming, and we'll see you guys in the next time.